So CZ over at Binance just dropped an absolute bombshell on FTX and Sam Bankman-Fried. We have this thread that just came out a little over a half hour ago. So very, very recently. I'm going to cover the thread and I'm going to break down what I interpret it to mean. There's some sort of, I guess, I don't want to say riddles, but pieces of the puzzle that aren't necessarily filled in by CZ's thread, and that's what I want to discuss. So CZ tweets, as part of Binance's exit from FTX last year, Binance received roughly $2.1 billion USD equivalent in cash, BUSD, and FTT. So for those of you who don't know, Binance was a seed investor in FTX. So what he's saying here is that they exited FTX, that seed investment. What they got was some Binance USD, that's their dollar basically, and FTT, which is the native token of FTX. So that's the exchange token for FTX's FTT. Due to recent revelations that have come to light, we have decided to liquidate any remaining FTT on our books. We will try to do so in a way that minimizes market impact. Due to the market conditions and limited liquidity, we expect this to take a few months to complete. Binance always encourages collaboration between industry players regarding any speculation as to whether this is a move against a competitor. It is not. Our industry is in its nascency, and every time a project publicly fails, it hurts every user and platform. We typically hold tokens for the long term, and we have held on to this token for this long. We stay transparent with our actions. So, wait a minute, let's rewind here. So, Binance is dumping all of its FTT tokens, which again, in that breakdown, it was $2.1 billion that they cashed out from FTX, basically from their seed investment. We'll call it 50-50 maybe is what they received. I don't think I saw any breakdown as to how many FTT tokens they had. But if we do that, then they got roughly $1 billion in FTT tokens, which is obviously a lot. And they are going to be dumping all those tokens over the next few months. Now, he names the reason for this as a revelation. And there's two things that I think he could mean here. I did some digging because he doesn't spell out what exactly his revelation is. But in order to kind of understand what they could be, we kind of have to know what has gone on with FTX as of late, the past, their structure, things like that. So this gets a little bit complicated, but FTX bought Alameda. I can't remember exactly when, but it was a little while ago. So, and for those of you who don't know, Alameda is a venture capital firm in crypto, much like 3AC and all of the other venture capital groups. They bought them, the fund, and it was kind of speculated on what they were using Alameda for. A lot of people thought that they were using it to run basically retail's pockets, so that they were hosting a lot of trades through Alameda and dumping tokens on retail investors. Well, there's a thread that was brought to light from Duo9, and he quotes a CoinDesk article, which I'll link the CoinDesk article down below. But what he sums up here is, he says in this tweet, turns out FTX CEO has billions in assets under Alameda Research, consisting of FTT tokens issued by his other business, the FTX exchange. 1. Print $3 billion in FTT tokens from nothing. 2. Send them to Alameda as collateral. 3. Free cash. So what he's saying here is essentially the FTT token, which again, FTX has total control over. They can issue what they want. They can basically do what they want with this token. The benefit to its holders are they get reduced exchange fees. What this allows them to do is basically finance their own investments or cash out money with what is essentially a token that it's a value token that they created. They have total control over. So in this case, Sam prints a bunch of this token, gives it to himself. Token goes up in price. He then ships the tokens over to Alameda and takes a loan against those tokens, which allows him to basically cash out his value in FTT without having to market sell them. Now it's Alameda's problem to start selling, which is technically still FTX. So it's like this whole convoluted thing that is going on where basically he is draining the FTT value and using FTT to finance all of his other projects. It's sort of like a non-stop capital raise. Like if you were looking at a stock, it would be like as if a company was just continuously issuing stock all the time, but they were doing it in a very, I don't want to say secretive, but not a very straightforward way, so you didn't really know that they were doing this. That's kind of what was going on here, allegedly. Now, I say allegedly. In this article, they talk about how much, first of all, the Alameda is one of the largest FTT, non-locked FTT holders, so they have the ability to sell this FTT. Well, how did they get unlocked FTT? Most of it, again, I believe was sent to them from Sam. The rest of the team probably was using Alameda, and then Alameda then just takes and over time sells this FTT on the market. Again, it's a way for Sam and whoever else sends Alameda the tokens to instantly cash out their FTT position. They take out a loan, which they have little to no intent to pay back, and then FTT goes and sells those tokens on the market. So I don't know if that was the revelation that CZ was talking about, and I'm sorry if that was confusing. It's kind of hard to explain, and it's like, again, it's the way it's all intertwined is like it could be kind of tough to sum up. But I don't know if that was the revelation that CZ was talking about, and he just didn't like how they were conducting business through Alameda Research, or if FTX is going insolvent. And this has been something that's been rumored going around for a while, that FTX is going insolvent, which is kind of crazy to think, right? Because just a few months ago, Sam was buying up projects left and right, talking about bailing people out. And I after thinking about it, it kind of makes sense, you know? How did Sam have all this cash? We assume that FTX just had a bunch of cash sitting on the side that they generated from trading fees and, you know, their exchange business, right? Well, what if they basically had unlimited capital due to this whole FTT thing that they had going on, where they could, you know, if they needed $100 million, they could basically just print $100 million in FTT, lend it to Alameda, who would then work on market selling it, while they cash out they have the cash in hand. I kind of wondered if they had this whole thing going on with FTT, and now since FTT price has fallen pretty dramatically, and the liquidity in the market's drying up a bit, if this sort of thing is sort of fallen apart, and if now they're not able to meet some of their debt demands, I don't really know. I don't really know what the deal is, or what would drive their insolvency other than FTT, or if they just burned through all their cash. They just spent too much cash, which is something that crypto projects are totally synonymous for. It's synonymous. I don't know if that was the right word, but you know what I mean. Like it's something that a lot of crypto projects do is they burn through a lot of the cash that they raised in the beginning. They run out of it in the bear market, because they spend it all on advertisements and all this other silly stuff. And so again, I wonder if that's not what's going on here. And the way Binance sees it is they're trying to cash out before this insolvency comes to light. Now, this is huge because, again, we're talking about Binance here, who is the biggest exchange, one of the biggest exchanges in the crypto space. They handle the OTC desks. They're very, very involved, obviously, in the space. Older than FTX, older than a lot of crypto exchanges out there now. They're an OG in the space, and they're in the know. So for them to be spooked by whatever is going on at FTX, to me, is a major red flag. So, guys, if you have money on FTX and you're keeping crypto there, might be a good idea to move it to your own wallet, at least for the time being. If nothing comes of this, then great, no harm, no foul. You move it back to the exchange, you're fine. But if something does come of this, you don't want to be involved. It would be similar to a Voyager, Celsius, all the 3AC type deal. Again, this would be bigger than 3AC. If FTX goes out of business, that would be absolutely massive. Now, we don't have any major evidence that suggests that they are going out of business, so I don't want you guys to think that that's what I'm saying here. I don't know for sure. Again, this has been a rumor that has been going around the mill, though, that FTX is going insolvent, so we'll be keeping a very close eye on it. I really hope that doesn't happen because that would be detrimental to the crypto space, and yeah, you look back and it just wouldn't make sense to me because of all the spending that they've done, you know, just on like the whole political front. Sam is basically leading that front for crypto, and he's spent tons and tons of money on that. But then again, it sort of would make sense. Like, is their FTT money well drying up? And, you know, is this sort of the nail in the coffin? Is Binance? I mean, Binance is selling a lot of FTT, so this is going to have a big impact on FTT. And is this the well that is keeping, you know, FTX alive? I don't know. I really don't. I tried to do some digging. Again, I couldn't find a ton of evidence, but I wanted to bring this to your guys' attention because this is big news and something to be watching. So, guys, if this is your first time to the channel, please like and subscribe, and I will see you guys next time.